The entire world is currently in a recession, possibly the biggest recession ever seen before. Or is it? Today I'm going to be talking about whether we're currently in a worldwide recession and why this recession could be worse than any others in history. I'll also be telling you how you can best protect yourself from this recession and potentially profit. So let's start off with a simple explanation or a simple definition of what it technically means to be in a recession. Gross domestic product, or GDP, is the measure of the value of the goods and services produced by a certain country or the world over a certain period of time. Therefore, if this value is decreasing, it basically means that something has happened that's causing businesses to not perform as well. For whatever reason, the businesses aren't making as many sales to external parties or external people. If the GDP declines for 2 consecutive quarters, which is 2 quarters one after the other, then that country or the world is currently in a recession. But what does it really mean to be in a recession? Why is a recession a bad thing? A recession itself, as in the decline in GDP, isn't really much of a bad thing, but it's what happens as a result of a recession that's the problem. For example, if businesses aren't performing as well, as in not making as many sales, they're going to look to cut costs and therefore might make some redundancies to make sure they still make a big profit. More redundancies means a rise in unemployment, and a rise in unemployment can often lead to people losing their homes and having their homes foreclosed on or being evicted. And if lots of people lose their homes, that means there's going to be a massive flood of homes onto the market, which could cause a potential housing market crash. There's a famous quote from the film The Big Short, which goes, "For every 1% increase in unemployment, 40,000 people die." Now this is a result of stress-induced heart attacks and unfortunately suicide. So obviously an increase in unemployment is never good. On top of this, because the businesses themselves aren't doing that well, it can often cause a crash in the stock market as well. Interest rates are then usually cut to try and stimulate some economic growth, but this is obviously a bad thing for us because it means our savings rate falls massively. So really during a recession, whatever you do with your money, it's either not going to grow that much or you could potentially lose a lot of money. Before we get any further into the video, if you've got any questions about anything I say today, be sure to drop them down below in the comments and I'll try and answer them whenever possible. So the first question I want to answer today is, are we really in a recession? And before anyone says it, yes, Captain Obvious, the published data does show that GDP for Q1 and Q2 fell massively, and therefore we are most definitely in a recession. But this isn't really a normal recession. Back in 2008, the governments were mostly concerned with bailing out the banks. US citizens got a one-off stimulus check of up to $600 and some small tax cuts and tax rebates. In the UK, furlough didn't exist in 2008, and therefore UK citizens got pretty much nothing. And therefore back in 2008, the recession hit really hard. The credit crunch also followed soon after, and therefore shockwaves of this recession were felt worldwide. But in 2020 there are so many more government measures in place. There's furlough pay for UK citizens, there's bigger stimulus checks and potentially more stimulus checks for US citizens. There's also mortgage holidays and rent holidays and stamp duty cuts and more measures as well. And this is effectively the government's way of almost trying to flatten the eventual recession. Similar to flattening the pandemic curve, it seems that the government are also trying to flatten any damage caused by a recession. Interestingly, the predicted data for Q3 shows an increase in GDP already. Obviously, most of the lockdowns across the world have been relaxed, businesses have opened, and the governments have been encouraging people to go out and spend to obviously increase those business sales. Now this is definitely a good thing because it shows that economies are recovering and hopefully the recession won't do too much damage. But there's a few major problems. Now the first problem is the threat of a second lockdown. Now I have gone over some of the most recent data in some of my other videos, and the data shows that the pandemic cases are massively decreasing, although in some countries like the UK they are actually back on the rise. I think both the UK and the US governments and other governments around the world as well will be keen to avoid a second lockdown because obviously they saw just how much damage the first lockdown did to the economy. Obviously if there was a second lockdown there'd be a lot more businesses going under, and some of those businesses that narrowly survived the first time round would potentially go under as well. On top of this, the government shelled out a huge amount of money for the first lockdown in terms of the furlough scheme, stimulus checks, mortgage holidays, stamp duty cuts and more. The CARES Act in the US cost approximately $2 trillion, and a second bill is being put in place that could cost between $1 and $4 trillion. In the UK, spending has been approved for up to $190 billion, and around $100 billion has currently been spent so far. If a second wave did come around, then it's unlikely that the US would be shelling out another $3 to $6 trillion, and also unlikely that the UK would be shelling out up to another $200 billion. And therefore a second lockdown would cause a lot more economic damage because obviously those government measures wouldn't be there. This would effectively cause potentially even more unemployment, even more people losing their homes, and an even bigger housing market crash. This leads me quite nicely onto my second point, or the second problem, which is that these preventative measures put in place by the governments could have potentially made the whole thing even worse. If you're enjoying the video so far, then be sure to drop a like down below and subscribe to the channel if you haven't already. Only about 17% of you are subscribed to the channel, which is really low. So if you've made it this far into the video, then be sure to subscribe. In June, the US printed more than 800 billion new US dollars. This is more than was printed in the period between 1776 to 1979. In these 200 years, the US bought Alaska and Louisiana, ended the Great Depression, built the entire system of US motorways or highways, and went to the moon. In total, more than 3 trillion US dollars have been printed as a result of the pandemic. The UK has currently printed an extra 100 billion and is expected to print up to 350 billion extra. So what's the problem with printing all this extra cash? Printing more money has a number of problems, and the biggest of these is inflation. So let me briefly explain inflation to you. Imagine an entirely separate world, and there's absolutely nothing in this separate world apart from £100 and 10 books. Nothing else in there, it's just a completely blank world apart from £100 and 10 books. Now those books would be worth about £10 per book. But say you introduced another £100 into that world. The 10 books would still be there, and there wouldn't be any more or any less, but there's now £200 in that world, so each book would suddenly increase to £20 per book. Therefore, when the government prints more money, the price of everything around us tends to increase. But this isn't always a good thing, because a lot of this money that has been printed hasn't gone directly into our pockets. Sure, we got our furlough pay and our stimulus checks, but of this 100 billion cost in the UK, only around 25 to 30 billion of it went towards furlough. The rest went into the public sector, went into housing, and it went into businesses. If the money that's printed into the economy exceeds the money that's received into the general public's pockets, then effectively our money becomes worth less, because obviously the price of goods around us increases, but our money doesn't increase that much. I'd much rather live in a world where I have £10,000 and a pack of eggs is £1, rather than living in a world where I have £20,000 but a pack of eggs are suddenly £10 each. Sometimes inflation can also get really out of hand. Try searching for the Weimar Republic in Germany, or 2007 to 2009 Zimbabwe. People were literally having to carry around wheelbarrows full of money to do their food shop, and people were having to be paid twice a day, because otherwise if they didn't buy their food on the same day that they got paid, then their money would become worthless and the price of food too expensive. There were stories of people literally stealing wheelbarrows full of money and leaving the money. It also has a negative impact of damaging confidence and certainty. Periods of high inflation are usually very uncertain times. People tend to hide away in a bit of a shell, and businesses are a bit nervous about investing or expanding. People are just as nervous about making big purchases, such as buying a new car, a new house, or going on holiday. And this is obviously a bad thing because it means businesses make less sales and potentially make redundancies so that they can still keep their profits. So how can you prepare for this recession to try and best protect yourself and maybe profit? Well, I think the first step is to try and preserve your wealth. If loads and loads of new dollars are printed and you're holding solely cash, it might not be the best. And therefore it's probably not a great idea to leave all of your money in a bank account, especially if it's a low savings rate account. Now you are going to need some money in your bank account because obviously you can't really walk to your local grocery shop and try and pay for your food in gold bars or intangible securities. You might be able to pay for your food in Bitcoin, but obviously that's opening up a whole nother can of worms, and Bitcoin isn't universally accepted in every single store across the world. If you've stuck around till this part in the video, be sure to drop a comment down below saying, can of worms, so that I know that you've made it this far into the video. So where should you store your money instead of holding loads of dollars or loads of pounds? Well, the first and probably easiest option is to start investing in stocks. It's really easy to open a stock trading platform on Freetrade, for example. If you want a link where you can open an account on Freetrade, then be sure to drop me a message on Instagram at ThomasJamesYT, and I'll be sure to send you a link. It's really easy to invest in stocks, but it's very important to remember that not all stocks increase and decrease at the same time. Some can be more resilient and less resilient to a recession. Some examples of stocks that are more resilient during a recession are going to be stocks like discount retailers or potentially energy and utility companies, because obviously everyone needs water and everyone needs electricity. Some stocks are also going to be a lot less resilient during a recession and be impacted much more. These are going to be luxury-based stocks that you don't really need. For example, you don't really need to go on holiday 3 times a year. It's probably a bit of a luxury, and therefore companies like airlines or hotel chains are going to be very heavily impacted during a recession. You could also potentially take a more hands-off approach to investing and invest in a government bond. That's probably likely to give you a bit of a better return than a low-rate savings account. But also remember that the interest that's paid on that bond is probably going to be paid to you in USD or GBP. And obviously if there's very significant inflation, then even a large amount of interest could become worthless. Another idea could be to invest in precious metals such as gold and silver. These are a really good store of wealth because obviously governments can't print more silver or print more gold. They could potentially find more gold, but that can't exactly be controlled by governments, and governments can't forcefully decrease the value of gold and silver. I personally think that at the moment silver is a much better investment than gold. Silver is currently below its all-time highs set in 2011 of £28 an ounce, currently sat at £21 an ounce, whereas gold on the other hand has already blown past its 2011 highs of £1,100 an ounce to about £1,500 an ounce. Gold could continue to rise in the short term, but it's much more likely to experience a pullback or a crash, because obviously it's already soared way past those previous highs to new highs, whereas silver is still currently below those previous highs. Remember, the idea is to buy low and sell high, not buy high and sell a little bit higher, or get really unlucky and buy high and sell low. I've spoken in other videos about why the price of silver could be likely to explode and why the price of gold could be likely for a pullback or a bit of a crash, because it's been on quite an extended run up. As always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!